Our next category in equity mutual fund is small cap mutual fund. In this scheme, minimum 65% corpus is invested in stocks of small cap companies. Small cap companies means the stocks of the companies having ranked below 250 according to market capitalization. These mutual fund schemes are suitable to those investors who have high risk profile and want to get high returns, and also having very long investment horizon, says more than 10 years. One should be very careful while selecting small cap mutual fund, and selection should fulfill all the selecting parameters. If your selection is perfect and investment horizon is long enough, then these schemes are capable to generate multi-bagger returns. Next one is the large cap and mid cap category. As it is clear from the name, it is the combination of large cap stocks and mid cap stocks. In this scheme, at least 35% corpus is invested in large cap stocks and 5% corpus is invested in mid cap stocks. This types of schemes is suitable for those investors who want to get little bit more returns and little bit more risk as compared to large cap funds, or want to get little bit less risk and less returns than mid cap funds. In this scheme, the investment horizon should be more than 5 years. Next one is the multi-cap category. In multi-cap category, condition number 1, minimum 75% corpus is invested in equity and equity related instruments, and number 2, minimum 25% corpus should be invested in each category, like 25% corpus should be invested in large cap stocks and 25% corpus should be invested in stocks of mid cap companies, and 25% corpus should be invested in the stocks of small cap companies. At the most, 50% allocation is allowed to large cap stocks. This category is more volatile and aggressive due to 25% allocation in mid cap stocks and 25% allocation in small cap stocks. This category of mutual fund is capable to generate good returns and suitable for those investors who needs good returns and having long investment horizon. And next category is flexi cap mutual fund. In this category, 65% corpus is invested in equity and equity related instruments, and number 2, fund managers has the freedom to invest across large cap stocks, mid cap and small cap stocks. In this category of mutual fund, generally fund managers maintain their investment up to 70 to 75% in large cap stocks. That's why these categories are less volatile and less aggressive than multi-cap categories. So we can say that in bear phase of market or in consolidation phase, flexi cap mutual fund can give you good returns as compared with multi-cap mutual funds. What in long investment horizon, returns of multi-cap mutual fund will be more than flexi cap mutual fund. As compared to flexi cap funds, multi-cap funds are more volatile, more aggressive and having the capacity to give more returns than flexi cap funds in long runs. So rest of the categories will be discussed in the next video. तब तक के लिए थैंक यू, बाय बाय.